Welcome back to the channel. My name is Brad, and today we're going to review all the NEOS new calls. We're going to look at SPYT review, and we're going to look at the new spreads for GIAX. If that is what you're interested in, stick around. So my name's Brad, and I've been retired now 7 months. Yeah, that long, I can't believe it. And today we're going to do SPYT. I have SPYT. I just want to review it to make sure that I understand what's going on, and I want to make sure that you might understand what's going on. So they sell daily call spreads, and they sell it the evening before. So the new spreads for today were sold at the end of the business yesterday. And let's talk about this real quick. Let's show over the last few days what they've been doing. So they sell it, it's right at the money where they sold the spread, and then they buy the next call above it. And they do that every day. I call this my roulette wheel. I am going to spin the roulette. I know from historical data that 9 days out of the month, it's red. And I know that the other days are green. So I am betting that they have 9 red days a month. And we're going to break down that math to show you exactly why I like this. They earn 0.1% every day. Now, that is 100% gain when the market goes down. But when the market goes up, they lose that gap between the one that they sold and the one that they bought. And you got to recover that somehow. And that's where they're going to give you that 0.1%. But that also means that their price doesn't quite follow SPY or any of the other indexes. On this chart that I'm brought up, you can see that they won 2 days. So the very first one, they went through the spread and they gained that little portion above the spread. You notice that the first green one, the market went down. That was a 100% win. The next one, the market went down. That was another 100% win. So they earned every single penny of that call that they sold, and the call that they bought expired worthless. Today's call, you can see that it went through. So we are missing that little gap where the price went through. And the best part of this is what I really want is I want an explosive move, not just a little move. I want it to go right through it and keep on going higher, because that's when you really see the percentages gain. But knowing this tells me that, hey, wait a second, I can't take 20%. And no, you cannot. And that is the lesson of today. Because you are missing that little gap on green days, you may have a little decay over time. And that's okay. They're paying you 20% and they're earning 20% every day. But you're going to have that little bit decay over time because it goes through that spread. Just Brad's opinion. But let's look at this a little bit closer and do the math. So I say 9 days. If I earn 0.1 every day, that's 10.8. Okay, if there's only 8 red days, I'm earning 9.6. And I'm going to say, being conservative, there's 7 red days a month. Mathematically, statistically, I'm probably going to be a winner. And I used to like to bet the ponies, and I used to like to go play blackjack. So I am literally betting with the house. I am gambling this time around, but gambling knowing that statistically I win. Now, some months I will be up, some months I will be down. And that is the long-term play. This is a long-term statistical number that you're looking at. And again, if it's in between, and that's the point of the picture on the left-hand side of the screen. If it's in between those 2 strikes, they have to pay to close. So how many times a month does it end up in between? this 4-day little study, it didn't finish any of the days in between. They always either went down or they always went up. And that's what you have to calculate in, that there's going to be those double zeros and zeros, the little green on the roulette wheel. Every now and then it's going to land on the green, and you have to be prepared. So that's why you can't take 20%. Does it give me my 8% pretty consistently? I am going to say yes. This is a 8% winner every day of the week. Just my personal opinion, but there you have it. That is why you may or may not want to think that you can live off of 20% on this fund, because there are days that it's going to finish in that gap, and you have to account for that. Maybe once or twice a month, but some months it might be 3 or 4. Some months it might be 0. And that is all part of the game of investing. You don't know where it is going to fall, above, below, or in the middle. But if you've ever played roulette, there will be streaks of one direction or the other direction, or there's been streaks that it's been the double zero and then the 0. And that is not what you want when you're playing roulette. Just thought I'd throw it out for conversation. If it happens, it happens. You just have to know that it will happen from time to time. On a price chart, if I look at a price chart, hey, this has been fairly consistent. Just slightly over $20, down to $19, back up to $20. They pay you that premium of about 20%. The expense ratio is 0.87. So this is almost a year old. They've been holding their own. You can see the dips, you can see the rises. And the best one is when you look at the August, when you see how the price recovered quickly, where it came up quickly and went through, we'll capture those big movements. And that's what you're really looking for, is a big movement and not a slow grind. You want a big movement, and that's that gap up from the evening to the morning. You're looking for a big move. If I look at this on a percentage wise, hey, we're down about 4%. That's about what I would expect. I really would. I'm thinking that there's going to be some days it's going to hit that 0 or double 0. So 4%, that's not bad for it being down. But when I look at total returns is following along with the S&P 500. And remember, on down days, it means I'm winning. So I'm going to play the roulette and say black. And I'm going to play the roulette and say red. But I never normally play the green 0 or double 0. That is not my statistical bet that I was going to play those two numbers. Moving on to GIAX. Where did they end up last week? And each one of these slides is going to show dot before today is where they ended up. So on SPX, they finished below the strike that they sold. That's a win. On the NASDAQ, they finished above. Okay, I'm going to take that as a win because that let us gain percentages. And on the Russell, they ended up below. So hey, 1 above, 2 below, we're going to take that. We did not finish in the middle, and that is where we don't want to finish, just like on SPYT. But let's move on to the NEOS calls and today's GIAX calls. So on the Russell, this is the IWMI. You can see that NEOS is significantly higher. This is the new calls that they will roll at the end of February. On GIAX, as of this morning, they're in the middle. So you saw a little gain, and now we won't be able to gain on the Russell until it goes through that top strike. So we'll see how that plays out this week. If I look at the Qs, this is QQQI, and the NASDAQ for GIAX. GIAX has already moved through the top strike. So we will see the gains on the NASDAQ side for this fund, and it's a percentage. So as the funds move up, we'll see this partial gain because it's already through the NASDAQ. QQQI, on the other hand, their strikes are significantly above. And you can see historically that the lowest strike that they have is right around where the top of the market was at the beginning of December. So, hey, I'm good. You could tell that this is above January's numbers. So, hey, we're good there. And we're just going to see how far the NASDAQ can actually gain in February. Now, SPYT and what they wrote on the S&P 500, GIAX, what are you doing? That's a big spread. Just thought I'd throw that out for general conversations. I prefer the smaller spreads that you wrote on the NASDAQ. But hey, each their own. They're spreading it across. Right now, we are below. And I think, from what I have been able to tell, is they're staggering these. So they always seem to be able to go through on the Qs, on our NASDAQ. It always seems that the Russell is next and the SPY is third. It just seems that that's how they're spreading those out. But you notice SPYI, where they wrote their calls, well, we will have to make all-time highs to go through those strikes. So, okay, probably not. I'm going to be a guessing man that we will not make all-time highs, but we could. And remember, they do a ladder. So it's 75% of the portfolio, and then they do 2 calls, each call being 50% of that leftover 75. So even if we do make a new all-time high and go through that first strike, it's only a small percentage of the total portfolio. And that is something that Brad likes about SPYI. Now, they also came out with their REIT, and this is written on IYR. And for NEOS, this is IYRI. And you can see where those strikes are for the month of February. So the REITs really have to move upwards to hit those strikes. In between time, we're collecting that revenue from the REITs, and they have a slightly higher distribution in REITs. So we'll see how this plays out. I like how far up they are, just generally speaking, over top of where they currently are trading. We'll see how this works out this month. The last one is BTCI. Now, BTCI is interesting. They sold it on a different exchange this time. Yes, they sold it on a mini Bitcoin. Okay, I can take that. The red line is actually where they actually have their synthetic written. The green line, the first green line that you see, is the first call. The second call is so high that I can't even put it on the same chart. So we have plenty of room for Bitcoin to go up and for BTCI to capture that. Their synthetic is actually written out 2 months from now, not 1 month, but the calls are written out 1 month from now. And I'll take this. And keep in mind, they held 25% in HODL. And HODL is a exchange traded product that actually holds Bitcoin. That's why I like this fund over the other funds. But hey, that is where the calls are currently for the month. I'm going to follow this. I track it every day when I get up. I like looking at the little graphs and say, am I above, below? But I don't threat and fear what's going to happen in the market, because I know if the market's down, that my GIAX is winning and my SPYT is winning. And I'll be able to take those winnings and put it back into the fund to cover any losses over a long period of time. And I also realize that the markets always go up and to the right on a longer time period. Just don't let the noise get in the way. Hopefully you enjoyed this episode. If you like this episode, give me a like and subscribe to the channel. Until next time, God bless.